Good evening all. Ira Epstein of Linn Associates with your financial market wrap-up for Monday. And we are now at the 7th of June, 2021, 6:25 in the afternoon. I want to thank all the vets, both out there and that have passed away. And it was 77 years that the war went on. And think about it, a 20-year-old kid's probably not with us anymore. But we all had family where people fought those battles, and we have a pretty good life because of it, and the world's a better place because of it. Let's hope we never have a war like that again. That's all I can say. In any case, thank you, everyone. I'm going to be doing something this Wednesday, so let's just start off with that and we get this out of the way. I'm going to hold another one of my What's Up live webinars. And what I mean by that is what is up? What's going on in the marketplace? That's why I called it What's Up. And it's live chart analysis on spiders, ETFs, futures markets, stocks. You bring the symbol, ask the question, I'll bring up the chart. It's fast-paced, it's 15 to 20 minutes long. I typically open it about 10 minutes before we start. It starts at 12:30 p.m. sharply, and that'll be this coming Wednesday. So how do you get it? It's simple. Either call us, go to our website, or you have another way. You see up here? Just click that. And that'll take you right to your registration. Got it? You can do that, either hit pause and do it, or at the end of this do that, but that's the other way. Otherwise, 866-973-2077. If you're in our mailing list, you've got the invite. If you register and don't show a few times, we will take you off the invite list and block you from being able to register for it. So we ask that you come. It's free. But don't take up people that want to get in, as we saw last time, and the seats get taken because you've registered yourself and you don't show up. That's all I ask. It's not very much, right? So we've got a market that last Friday, we had that jobs data number, and it was a beautiful number from my perspective. It was not too cold. In other words, it didn't have a 3 in front of it or a 2. The revision on the jobs data was only 18,000 jobs or something like that. Not very much. We didn't get a 600 and some odd thousand job number. It was in the 5s. I loved that. So it's slow growth that'll increase. Why? Because people starting June 10th, in 24 or 25 states, it starts rolling off as of that date the government's $300 a week payment. And people don't wait for them to not get that anymore. They start looking for jobs, and that's why these numbers are coming back at us. And yes, there's a lot of people that count on $600 a week instead of making maybe $500 a week, breaking their back. That's how they look at it. If you don't believe that, get into the real world. These are a lot of the service jobs of people that service those people that probably don't watch my show. I get it, but it's very important. So we'll see what happens with that. Now the market's trying to figure out what to do with it. Well, we get the European Central Bank meeting this Thursday. I doubt they'll do anything. I think that they're still waiting for clues from the U.S. The week after, we get our FOMC, and why would they make a move here? They said they're data dependent. They're getting the pictures they want. They believe inflation's still transitory. If it in fact is transitory, well, that adds another thing. And if you look at the commodities that were up from lumber, copper, they're nowhere near their highs anymore. They've sold off rather smartly. So is that inflation push going to happen or not? Well, that's the hard thing to figure out. When we look at the S&P, it certainly doesn't appear to me that the market was riled by Janet Yellen and the G7 making the first of many moves that have to be made to get a 15% international tax done for countries that are in the G7 and hopefully the G20. There's going to be pushback from the corporations. You know that's coming. And how they push back is they donate money around the world to these politicians. So money speaks. So we'll see how much pushback. Is there going to be probably a minimum tax? I'd say the time is ripe for it after a pandemic. How much? Don't know. What the final package looks like? Don't know too much about that. And I think that's what the market's saying. It doesn't know. Remember, these markets are very earnings driven. You put on a 15% tax, you hurt earnings, but you don't wipe them out. Very important to understand. And if you looked at the biggest corporations in the world and what they pay in tax, very few aren't paying something, and those that are, there's the big ones in the U.S. are paying in that, let's call it 8 to 15% range. There's a few down there that are paying like 1.8%. They're going to be on everybody's radar. As you can see here, you've just gone sort of flat in these markets, and the pattern is interesting in that it's dangerous. You've got a higher high, lower low. That is not a trend. You have a market that is challenged 3 days ago. Down here, the 18-day average of closes held it. The upper Bollinger Band is at 42, let's call it 42.50, 275 to just round it. That's going to be your resistance point. You seem to be caught in here. If you were to take out 41.65, then I'd look wherever the lower band is to be the support. In other words, I think you're caught in this pattern right through here. At the same time, you're trying to embed. Now, embedding means that very quietly, momentum is changing from being overbought to locking in a trend. You need to have at least 3 sessions of closes where both numbers that make up the slow stochastic stay over 80. You can't go by today. In fact, I'm not, there we go. This one is Monday. There we are. I knew I'd have something here. As of today, you closed Monday with both over 80. Both over 80 were on Friday and the day before. You're there. So what I think is going to go on is on these pullbacks, I think the pros are going to buy, looking to get up to that Bollinger Band, and they'll bail if the red line closes under 79 with a reading. In the NASDAQ, same thing. You're trying to get the embedded reading. So today, I don't want to count Tuesday. I want to go to Monday. Both numbers over 80, both over 80, not the day before. So you need to get through today, Tuesday, to prove that it can embed. Then I'll have the same sort of picture that I'm looking at there. What about the Dow? Is that embedding? Well, both numbers you can't count on Tuesday. So you go to Monday, yep, but watch this. Nope. Got to get through tomorrow to know if you're going to be embedded. So you're just very overbought in a trading range in the Dow and in the NASDAQ. And when you look at the Russell, you have your fully embedded reading. So this market should be ripe to challenge that upper Bollinger Band again. It is acting stronger than the other two as well. In the VIX cash, if we had a further move up, I'd look for further decline here. I think the pros sold this market on Friday. If you're a subscriber of mine, I said that. I said that I think because of the embedded reading, they're going to sell into things. They did, and they're ahead of the game. The question is it going to the Bollinger Band, or is it going to stop at a number that it's been stopping at called a window envelope? In this free video, I don't show you everything. The window envelopes are not there. They're for my subscribers. They also have access daily to the times when I'm making the changes on the values of these deviations from the 18-day average where they're exact parallel lines. That's been the support number on that. In the T-bond market, where'd you go today and the other day? All right, here's the market on Friday. The market makes a big run, gets to 157.17, just misses the upper Bollinger Band, but we'll give it a kiss today, or will we? It misses it by a tick. For all purposes, you're knocking on the door. I think the pros are taking money off the table right here at the market. That's what I told my subscribers that are the paid ones this morning. Anyone that's long, I'm looking for that. But I do think, are they going to buy it again? Not yet. Too overbought. When you're overbought, not embedded, you let the other guy carry it because the odds are to get out of overbought. It's either going to embed or correct. You don't play it's going to embed. You play it'll correct, and if it does embed, you have a game plan for that anyways. In the 10-year note, same thing. Coming up to that resistance point, overbought. What is the trend? Lower low, higher high. A whole different trend type there. And in the dollar index, you're back to neutral territory at the 18-day average of closes. Sort of stuck with momentum flattening out. It had been pointing up, and it's like, bang, you take your pin, you burst the bubble, and that all happened when? Not on Thursday, but on Friday with the jobs data. I looked at that number and I went, whoa, I am such a happy camper of what I did for my subscribers, and I still am. So I'm looking at what that does. Euro, resting. right at the 18-day average, trying to figure out should it get bearish for a move down here or not. Because it keeps closing over the 18-day average, I don't know what the pros are doing. To sell it at 121.91, the 18-day average, the risk has to be to 122.58. They might be doing that. So I don't know. I'm more inclined longer term to want to be bullish the euro and foreign stock markets than not. In the British pound, this market's sort of caught in trying to figure out what's going to happen June 21st when the market is looking, will the UK fully reopen or not? The other thing is the Bank of England. Are they going to tighten? And they claim, in fact, the market thinks they'll be the first of those type of banks to actually make the tightening. So we'll see what happens. Will that be bullish or bearish? Generally, it's a bit bearish, but you don't have a picture here. You've got a downtrend, bias up, and flat momentum. You don't have a story. In Bitcoin, it is still bearish. The market still has lower highs, lower lows, under the 18-day average, momentum pointing down. You'd have to get over 39,635 to negate the downtrend. Until that happens, it could still be targeting, let's call it this 30,930. The differential between a WTI and a Brent went from this $3 range very quickly into the $2.40 range. Now, I think that who's running now oil prices of the world is OPEC Plus. That's it. I think they have taken over the leadership. U.S. producers have basically told you in plain English and doing it that while they'll keep and put money that they have to into wells to keep their production going, they're not expanding it by very much. They're taking down their balance sheets and returning to their investors dividends, cash. That's the play that they're in right now. Excuse me. Higher high, lower low, fighting the upper Bollinger Band. Excuse me there. I have bad allergies. And still embedded. So with that case, I still think the trade's going to buy and bail when and if the red line closes under 80. So look at the views. My point of view is that I think that it's a buy on breaks. The same thing in WTI, no change there. In gasoline, starting to embed. I'm going to look for even higher prices. And I know you're going to say, how much higher can they go? A lot. How's that for a word? America wants to be outside. America wants to drive. $4 gasoline, we're already $4.30 in Chicago for a lot of our gasoline. I'm talking the premium grade. I think the regular grade's $3.50 or something. So prices still very, very strong and a lot of demand for them. Hope to see you at the webinar. Remember, you just click there, and I'll see you at the webinar come Wednesday, and of course, you'll see me tomorrow. Take care.